housing market price prediction in 2020, and home prices and forecasts. Hey gang, this is Mike with MrNoFluFF.com, and today I'm going to give you my opinion. This is not financial advice. I'm not a CPA, an attorney, or financial advisor, or any of that stuff. These are just my opinions as an entrepreneur for 25 years, someone that has never had a job, own a real estate brokerage firm, own a moving company for 14 plus years, and also has been a full-time real estate investor since 2006, 2007, okay, in the last crash. So there is no secret that the Fed, the central banker, is printing so much money. I'm not talking about millions. I'm not talking about billions. I'm talking about trillions of dollars in such a short period of time. There is no secret that depends on which statistics you look at. Okay. Some people say there's $21 million people lost their unemployed. Other statistics like NBC says 40 million. My opinion, there's about, like I said before, many months ago, 40 to 60 million people unemployed. And that doesn't include the small business owners because they don't fit into this category. Okay. And so there's no secret that we're not producing anything. Everything's outsourced to China, to all these other countries. It's no secret that if you go to your local store, there's a shortage of inventory because of the tariffs, because of the sanctions that's going on. There's no secret that the king dollar, being the world reserve currency, the petrodollar, is in trouble. There's no secret that we're getting into a cold war with China, potentially into a hot war. Um, it's no secret that. So what does all this mean? All this translates into my prediction of the real estate housing that in the next 6 months to 18 months, we're going to see massive price cuts in the real estate market nationwide. And assuming that the foreclosure is not stopped, because if they stop the foreclosure just like they did with the evictions and the foreclosure, if they stop them, then this will prolong it. However, if they open the eviction courts, they open the foreclosure courts, we're going to see massive inventory come down the pipe, and which creates a great opportunity for select people that have cash or they have the knowledge to structure what I teach at MrNoFluff, where they find properties, off-market properties, at a deep discount for motivated sellers, or they get these sellers to become their private bank. If you're interested in that, join one of my mentoring or services at MrNoFluff.com, like the Abundance Club or profit sharing, and so on. Now, why do I say 6 to 18 months? Because the stock market is not like the real estate market. The stock market is very fast, very liquid. People can quickly sell. Where the real estate market will take effect, ripple down effect. And it's going to take 6 to 18 months for us to start seeing inventories coming in. You also have to realize that we have nationalized a lot of stuff in America, like our businesses or our banks or big to fail corporations or, you know, mortgage companies. Like, for example, Freddie Mac and uh, just blanked out of my mind, Freddie Mac and Fannie Mae. Well, these are basically a subsidies of the government that allows majority of the home sales in America happen through what's called an FHA loan or a VA loan, which are highly leveraged out. What the sellers or the buyers only need to have 3% down, right? And much lower credit score, which allows the boom in the real estate market that we have. But unfortunately, whatever went up is going to come down because majority of home buyers in America are FHA and VA. And for example, Soraya was talking to a motivated seller yesterday, all right, in Las Vegas, like the number one hardest hit place in America. tons of motivated sellers out there. If you're interested in finding deals in Las Vegas, make sure you join my profit sharing or abundance club or academy. Well, this seller has been trying to sell their home. It's a $390,000 home. It's not a cheap home. It's not a war home. It's a beautiful home, $390,000 home. They've been trying to sell it for such a long time. They haven't been able to. Now they have subsidized, listen to this, they have subsidized a renter to live in the property where their mortgage payments are $1,900 a month, but they're renting it out to a renter for $1,600 a month because they're tired of bleeding. They're tired of it. They're not able to sell this property. So right now we're in a situations where we have motivated sellers that care about their credit, maybe have good business, whatever, but they're now in situations where they're willing to come out of money out of pocket, A, to sell, or B, have someone live in the property and that person pays 1,600 and the homeowner pays the remaining couple of $100, which is 1,900 bucks. Okay, 16, 17, 18, I think $300 more. The homeowner pays just for someone living there month after month. Okay, think about that. So in a year, the homeowner is going to take $300 times 12, that's almost $4,000, $3,600 lost, not including when shit breaks down. Okay, I'm going to wait for this plane to pass. So now we're in a situation where we have millions of Americans that have VA loans that most of them got with no money down, and FHA loans that they got highly leveraged out with maybe 3% down, if even that, right? And the reason I say because even that, because there's so many cities that have, down payment assistance programs. So some of them maybe move in with no money, right? So you have so many people now leveraged out to the extreme. And now they bought the house when the market was going up. They bought the house into 2015, 2014, 2016, 2017, 2018, right? At the top of the market. And now the market's going to be coming down. And the down part's going to happen is when this foreclosure starts hitting, right? When these foreclosures starts hitting, it's going to, no matter if the home seller is in denial, they're like, no, my house is worth so much more just 4 months ago. It doesn't matter. Once the foreclosure starts hitting and they see houses on their lot down the street selling $40,000, $60,000 cheaper, no matter how much they're going to fight, eventually they're going to go to foreclosure or stay in that home or sell it and lower the price. All right. But unfortunately, a lot of them are not going to be able to lower their price because they got into the home without having 20% down, without having good credit. And if they're in like Las Vegas and some of the other states that have been heavily hurt because of the hospitality, then they don't even have jobs. Right. And so they cannot come and subsidize a renter or subsidize the new buyer and come out money out of their pocket from their 401s from their savings because they're in a tough situation. So that's going to escalate into more inventory, more price cuts, and so my prediction is in the next 6 to 18 months we're going to see nationwide price coming down. Again, this is just my opinion. I'm not a financial advisor, but I listen to the heartbeat of the streets, and that's what I'm seeing, and that's what I'm betting against. And in 2016, guys, 2016, when no one thought gold was the play, I'm on video saying that I'm getting into gold. In 2017, I said I'm getting out of real estate because it was just way too bubbly. It was just way too bubbly. And right now we're at the bust of the bubble. And in 6 to 18 months, we're going to see massive price cuts because you got to be realistically. There's company after company after company filing bankruptcy. There's companies after companies filing and not opening up. Now, if you're listening to the Big Brother stacks or the talking heads on TV, then of course you have a different vision they're painting for you. But if you're looking at, for example, Yelp, right, just like a company that deals with small businesses and medium businesses, they're reporting 50% of the people that own businesses that, said, I'm going to temporarily close because Big Brother told us we had to through regulations, are not going to come back. If you are, going to the stores, like your favorite store, like, I go to REI, this is not a sponsor or anything, just where I like to shop. I go there and they don't have as much inventory as they did before. It doesn't matter if you're looking on their online store or in their in-store, they just don't have that much inventory. And it looks like, you know, someone had vandalized the place or something, because before you can go up there in their mattress and they have so many mattresses, they have so many backpacks, that has so many bikes, that has so now you go in there and there's hardly any bikes there. Not only at REI, at majority of the bike stores in America. Well, why do you think that is? Well, the tariff, the sanctions, and so these things are all going to all lead into hard times for many Americans because they're leveraged out in their assets, which is their homes, and they're going to have no equity, zero equity, marginal equity, or negative equity. And on top of that, the cost of goods are going to be skyrocketing because we're not producing anything here in America. And majority of the stuff is coming from outside, like China. And if you guys don't know, we're at a Cold War with China, which is all this stuff from geopolitical all the way down to the printing of the money, all the way down to mandatory closings, all the way down to millions of people are unemployed, all the way down to millions of people not paying their credit card, all the way down to big companies like Nissan and other people have to cut major millions and millions of dollars or they're going to go bankrupt. And all it's going to ripple effect into the housing market because the housing market is the real deal. It's not like stocks. The housing market is the real economy because everything is tied into it, from mortgage brokers to insurance to your hardware store to your contractors to your lumber to plumbing. I mean, so many different things, guys, are tied into the housing market, and that's the real economy. And that's one thing that's going to be harder to manipulate versus the stock market, because the stock market is very easily manipulated. That's why I don't like the stock market. It's easily manipulated through, big brother and powers to be, right? And you can see it right now that the stock market is a total delusion of what's happening in the real economy. One great example is gold prices. If you look at the spot price, which is basically the paper market, which is, the fake, in my opinion, it's the fake market. Whatever gold price is today, if the spot price, if you go to your local gold store, if you go to your favorite online vendor that sells gold, which is way lower than your local gold store, they're all going to charge you $100 to $175 over the spot price. So let me say that again. The spot price, let's say, is 1,800, just to simplify it. Let's just say, to simplify it, the spot price, let's say, is $100. They're going to charge you $200 to $275 more to get that. I'm just simplifying. Gold is worth a lot more an ounce, but just to simplify it. And why is that? Because there's a shortage of gold and silver. There's a big old demand on it. The herd is coming in like every other channel you listen to, from TV to YouTube. They're talking about how great gold is and blah 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 blah. Now people are coming in, and because they know what's going to be happening. And but it's really, in my opinion, a wrong time to get in gold and silver. 2016 was when it was $1,100 an ounce. Can it still go up? I think still can go up, but I would not buy any right now. What I'm putting my attention on is what the herd is. The herd's now getting into gold and silver. I'm going to be getting into real estate, right? I'm going to be getting into real estate because 2016, 2017, I came out publicly said I'm out because the market was so bubbly. Everyone was getting into real estate. It was massive wholesalers, massive fix and flippers, massive real estate agents, everyone and their mama. And, people were buying, buying, buying. The asset was going up and up and up, up. And it was just crazy to buy at that time. And now, in another 6 to 18 months, we're going to see that thing pop. We're already seeing it happen. But some people say, well, Mike, I just read the news that house prices are going up. And I can explain this like an analogy. Imagine you have a water hose, right? And you have cut off the water at the faucet, right? And you have a big hole. And so you can push that, contract that um, water um, pipe, and the water will spark up a little bit, right? And that's what's happening with the real estate. The price is spiking up and higher, but the flow has shut off. The flow has shut off. And what do I mean by the flow has shut off? Well, people to be able to get these ultra low interest rate with shitty credit is non-existent. Bankers are pulling back their money. Now, remember, majority of Americans are living, a debt-based society from the corporations. That's why you see Ford, GM, all these people are having hard times. American Airlines, Boeing, all these people are having hard times because it's a debt-based society. And what that means is there is no cushion. So we're hitting into times where there's massive amount of debts in the public sector, in the government sector, in the actual homeowners, and but the prices are going to be coming down because they're pulling back the credit because everyone needs that crack. That is the new crack, and everyone's hooked on it, unfortunately, and they think that's the way to be your dreams versus sacrifice, creativity, imagination, tighten your belt, and delay gratification. You can't just get the thing handed to you and then make installment payments on it. You can't make installment payments on your goals, guys. You can't make installment payments on your business. You can't, I mean, you can, but then you're going to be in the trouble where people are buying when it's going up, and now they're going to have to pay the price, which creates a great opportunity for real estate investors, right? It, it creates a great opportunity for real estate investors because the market's going to be coming down. There's going to be way less competition. Everyone's exiting because they can't make a living in it, or they think. Uh, and credit is going to be pulled back. And there's going to be tons of motivated sellers out there, tons of motivated sellers. And that's where the opportunity comes because prices are coming down, tons of motivated sellers, which creates opportunity for what I call OPM, other people's mortgages, other people's money, to have the seller become your bank. Now, if you're interested in that, make sure you join the profit sharing. If you have a successful business and you want to just go ahead and you see the opportunity like I see it, and you want to go ahead and find these off-market properties at a deep discount, or have the seller become your personal bank, so the investor doesn't have to use cash, all his cash, or use credit or any of that junk stuff. If you're interested in that, join the profit sharing. It's $3,000 for 1 month of coaching. But guys, I'm raising the price up very, very soon. It's going to go a lot higher. So if you're been not sitting on the side, you want to join now because the price is going up, guys. Okay, I'm going to turn it into $5,000. But again, what you're going to get in this course is my time, all my systems that I provide you totally for free included in the program, which is $9,500 worth of systems and tools and paperwork and etc. It's all given to you without a catch. I want to help you go out there and do a deal. Now, if you're broke, you're broke. I got two options for you. The new flip is where I teach you how to start your own business in your own backyard with just $100, and you can start earning today if you just take action without getting into debt, without spending a lifetime of learning. Okay. Now, this system, the new flip, works in every state in America, plus other countries like Canada and Great Britain, where I have other students implementing this and have done videos talking about the successes they've been having. Okay. You can watch it at MrNoFluFF.com. So the new flip, if if you need money, you need to start a business that only requires $100 to start up capital. So your only risk is to lose $100 if it doesn't work, right? But the return is, for me, I've done 700x. So I put $100 in, made $700. Put $100 in, made $500. Put 100. So I've done anywhere from 2x to 7x in the new flip. And I've also had many students do the same amount in the ranges, and some even more. Okay, you can hear the stories at thenewflip.mrnofluff.com. Listen to their videos, like my student in California that did 8 flips, guys, 8 flips in 4 weeks, guys. So like that's 2 deals a week. He didn't use no credit cards. He only started with $100, just like what I talk about in my course. Okay. Now, if you're broke, you're struggling, another great option is the Academy. I give you my best-selling courses plus monthly coaching. We'll meet once a month, okay, for just $47 a month. To get more information about that, go to the academy.mrnofluff.com or just go to myrealestatedojo.com, and all the information is there. And last but not least, if you're in the middle, you like to work with me on a weekly basis, I meet every Saturday from 10 to 11 right from your computer. If you're interested in that, then join my Abundance Club mentorship, where I answer all your questions. I bring in new trends and what's working for me in the trenches every Saturday from 10 to 11 from your computer. Again, on this one, it's 97 bucks for 4 meetings a month, but the price is going up dramatically, guys. Okay, the price is going up dramatically just in a few days. So if you're sitting on the sideline, make sure you get into it because I don't want to have too many people in it. All right, guys, thanks for watching. Click the like button. Let me see if I have any questions. If you have any questions, I'll be happy to answer for you. Uh, Robert Glenn says he's waiting so he can help folks with OPM. Man, me too, because there are going to be millions and millions of people that are going to be uh, in this situation. For example, the last crash, 2006, the bubble of was because of mortgage-backed securities, but it was pretty much because of subprime lending. Today, which is the lower people with less education, less income, etc. Today, the bubble is going to be the middle class, and we've seen one example of it where landlords were had to not be able to evict, not be able to earn a living, and subsidize the lifestyles of the renters. And no joke, guys, where the state still wants their property tax, you still got to do the repairs, the maintenance if you're the landlord. But on the other hand, they're sucking the riches from the middle class and pushing it down and subsidizing renters. So, you know, there's going to be a lot of tough times for a lot of people. And in this crash, it's not going to be the subprime, the lower is going to be the middle class that's going to get robbed. That you're going to be able to find beautiful homes. So what am I saying? Beautiful homes, $1 million homes, $2 million homes, $500,000 homes. Depends where you are. In some states, a $500,000 home is a ghetto, but in some other states, $500,000 home is 3 times above the average home. Right. So $1 million home is 6 times above the average home. So those are like pretty nice homes in some states. So I agree with you, my man, Robert. Great time to be an investor, in my opinion. Less competition, tons of motivated sellers. Before, there's always in the market, doesn't matter if you're going up, sideways, down, there's always motivated sellers. But in this market, there's the motivated sellers is going to triple or quadruple. We already seen it 40 million, 60 million people unemployed or lost their businesses in my book. And forbearance programs are going to be ending soon. Evictions are starting soon. And so it's going to be a party for the investors, but a lot of sadness for the homeowners. And the reason is central bankers, guys. All right, guys, thanks for watching. And let me see if there's any other comments. All right, someone asked about the new flip. You can download it at My Real Estate Dojo. Soraya says CoreLogic is forecasting a 6% drop in the housing market from 2010 to 2021. And that's pretty interesting. I even think it's going to be a lot more. Maybe this is nationwide. There are going to be some areas that are, not going to get affected as much, but some other areas are going to get affected a lot more. Especially the areas where new homes are being built, guys. Those are going to be affected extremely because home sellers are going to be competing with home builders, and man, it's going to be tough for them, guys. Okay, thanks for watching, guys. Click the like button. It helps out the algorithm. Join join the real estate discussions. It's totally free on Facebook groups. Go to community.mrnofluff.com. If you haven't downloaded my free book, go to My Real Estate Dojo, guys, and download my free book about real estate, the Real Estate Beginner's Guide. Peace.